All right, welcome back to Yahoo Finance Live on this Monday morning. We've talked a lot on this program about the housing market. Everybody wants to buy a house. No one can buy a house. We've talked about the lumber market, but what's happening over on the commercial side of the exchange? Some people are coming back to the office. The three of us would like to get back to the office. We'll see what the timeline looks like there. And the investment opportunities certainly have remained alive in that space. Let's talk to one person who is focused on what's happening in REITs right now. Alexi Panagiotakopoulos is the CIO at Fundamental Income. Alexi, thanks for jumping on the show this morning. So let's just kind of set the table as we sit here today, April 2021, what the state of commercial real estate investing is from your vantage point. And I guess maybe I'll ask it, how much better is it today than we would have, consensus would have assumed, a year ago when we were right in the depths of the COVID pandemic?
Thanks for having me on. I wouldn't say it's necessarily better. I would say it's just more clear. In this market right now, you see a lot of money flowing to investments, trying to protect for inflationary pressures, trying to find income, trying to time this reopening trade. And when you have a dovish Fed and you have low interest rates for the foreseeable future, you're starting to see money go back into risk-on investments. And so with deflated yields, it's difficult for portfolio managers in the life companies and insurance companies, et cetera, to try to find yield for their investors. And so we've seen now with vaccinations, the world starting to change and reopen and people starting to get more bullish on what we like to show as in-person, activities. There was a really big e-commerce trade and tech trade that went on from March to, let's call it, November of last year. And now you're starting to see people go back into real assets like real estate and like commodities.
And just to take a step back by way of background as well, your ETF focuses on net leases, whereas if I understand it correctly, the lessee pays stuff in addition to actual rent, things like taxes. Tell me if I've got that right, first of all.
Yes, you do.
And secondly, what is there an advantage that kind of investment has? Is it just more common right now when we are looking at certain kind of real estate? Why focus on that in particular?
Real estate, in our eyes, is not created equal. You have, the VNQ, for instance, or the XLRE, the spider funds, focus on what we call like the S&P 500 of REITs. But REITs are very, very vast. There are office REITs, agricultural REITs, mall REITs, hotel REITs, et cetera. Just like you have small cap value funds or mid cap value funds, we saw an opportunity in the market and with our expertise to create a strategy that's really focused on long-term contractual cash flows and the businesses that we call, the backbone of America. Their gas stations, their grocery stores, their daycares, their, CVS's and Walgreens, FedEx's and Amazon distribution centers, manufacturing facilities, et cetera. And so, right now, Myles was talking about, residential and everyone wants to buy a home. Well, at the corner of every, suburban market is a pharmacy and a gym and a Starbucks drive-through and an In-N-Out burger. And so we're very bullish on residential. And with residential, and it may not seem like it in New York where everything goes vertical, but you go to Austin, Texas, or Salt Lake City, or Idaho, and everything's horizontal. And so with residential comes commercial. And every residential neighborhood wants commercial amenities, and those amenities focus on long-term tenants, like we just mentioned in our strategy.
The pandemic has really decimated retail. Is now a good time to go out and buy some mall REITs?
There's always an opportunistic trade. The Simon Property Groups of the world are fantastic organizations. We also run a private strategy backed by Brookfield Asset Management, who's one of the largest retail owners and office owners in the country. And I do think that there is opportunity out there. I think that malls are repositioning. However, weary investors to certainly be cautious in what they're buying and know what they're buying, because at the end of the day, what you're owning is very important for your portfolio's performance over the next 5-10 years. And we as investors like to focus on cash. And, what Julie was talking about earlier, the reason our strategy is different is you have longer term contractual cash flows with income that may be, 10, 15 years in age. And right now, investors, both institutional, retail, retirees, are all looking for cash in their portfolios. And these subset of REITs happen to kick off quite a bit of cash, north of 4% historically.
And, Alexi, just finally, you said that maybe it's not better, but it's more clear than it was a year ago. A lot of these themes that we're talking about feel like they would have been germane in 2018. Like we could have had this conversation about, where the attractive areas are to set up retail 3 years ago. And so we hear on this show a lot, oh, pandemic changed everything about our business. Did it really change everything for how folks are thinking about real estate footprints, or are we sort of seeing the evolution of that space kind of in line with maybe what assumptions would have been 2 or 3 years ago?
I do think it changed quite a bit. It changed quite a bit the way lenders look at it, the way capital markets look at it. People respect long-term contractual cash flow. And when you have uncertainty of things like hotels, which have nightly leases, things like multifamily, which have annual leases, and office, a lot of companies across the world have rethought how they look at office and what their footprints might be. And because of that, urbanization and kind of move to land, you're seeing a lot of offices and a lot of companies relocate headquarters. And so that's going to have a dramatic effect on what's coming from those institutional real estate investors and what investors demand from a risk return perspective within their own portfolios.
All right. Alexi Panagiotakopoulos, CIO at Fundamental Income. Alexi, appreciate you jumping on this morning. I know we'll talk soon.